Hi there, I'm Mitch Argon with Calneva Realty. Welcome back. I'm going to take you through the Greater Reno Tahoe real estate market for June 2025. Okay, let's get started. Like we have in prior months, we'll start with median price, looking at each major market or area within the region. And you can see that we have modest price appreciation, a little bit of regression here in Dayton. And Tahoe, a little bit off. There was only 2 sales in Tahoe last month in Douglas County. So we got a very, very small sample point to get that median price for May of 2025. In general, what you're seeing here is prices moderating. You can see we're down into, the highest is mid-single digits, but we're really looking at low single-digit appreciation compared to last year at this time. If you look at that on a 2-year look back, this is pretty much what it looks like. I shared in a few prior months, though, that if you go back to about a 3-year look back, it's pretty consistent. Using Reno as a bellwether, you can see here we're at 630. I think 3 years ago in June of 2022, that was 635. We've been a little bit above that, a little bit below that, but we're kind of, for the most part, kind of flatlined out at that point here in the Reno market, which is this blue line. And the other markets, you can see what's going on in each one. So if we expand this out and we look at homes sold, you can see that from May of 2024, which is a year ago, May, to last month, May of 2025, a little bit of a mixed bag. You can see some markets are up, some markets are down, just a fluctuation on a month-by-month basis. Over here at month supply of inventory, which is the true indicator as to whether we're technically in a buyer's market or a seller's market, which we're seeing a lot of conversation around today. You can see that the markets are generally moving up. Reno and Sparks are up 17 and 22%. You can see Carson City's down. Carson Valley is up quite a bit, higher than as a percentage of these other markets in here. And you can see that Dayton and Fernley are a bit down. Tahoe market, again, not a very strong indicator as to what's happening in the Tahoe market because of the sample size and the nature of that market. But I think the key thing I wanted to point out to you on this one is that you can see here at 4 months supply of inventory for June of 2025, we're 67% higher than we were 1 year ago. And so that 4 months is kind of the trigger point to being the entry point into a neutral market where prices are going to start to flatten out and probably not see upward appreciation on pricing or downward appreciation on pricing. If you look back over here at Carson Valley and you look at this, you can see a 2% rise, which is pretty small from 705 to 722. I would expect that if this number continues, we will see those prices flatten out. And if all these markets continue, we'll start to see prices consistently flattening out throughout the region. That's welcome news for home buyers. We'll see what happens with the interest rates. Inventory, directly related to the month supply of inventory. You can see Reno and Sparks are building, and we'll talk about this in just a little bit later in this presentation, but they're building up on average about 30%. Carson Valley up 52%, so a big number as a percentage here, and that's partially what's contributing towards that higher month supply of inventory on the prior slide. Carson City a bit down, and Dayton and Fernley a bit down, Fernley down quite a bit. If we look at this on a 2-year look back, you can see that each market, not all markets, but the major markets, one with the largest volume of home sales are down, or are up, pardon me, on inventory. So here's June at 691, a year ago it's 547, 2 years ago it's 488. You can see that in Sparks, which is this second line down here, the second biggest market in our region, we're at 202 now. 1 year ago, 178, and 2 years ago, 163. So we are seeing inventory build, and that is not a unique phenomenon to our market. It's built much more rapidly and over time in some other markets in the country, which we'll touch on in just a bit. And again, the month supply of inventory, you can see Carson Valley spiking up a bit here and coming into this territory of neutral market, which is between 4 and 6 months. We'll see how that plays out over time, but that's something to watch as we move through the summer and into the fall. So I want to take just a moment and recap. This is the same as we had last month. We are seeing this trend, this phenomenon continue. What I refer to as pandemic boom markets, Texas, Florida, the Georgia, the Carolinas, and southern Nevada, because we boomed as well. Idaho boomed, Utah boomed, Colorado boomed. But in these markets, what we're seeing is this issue where inventory levels are exceeding pre-pandemic inventory levels. And so these markets have seen sales volume slow. That's partially why the inventory is building. We're also seeing more challenges on affordability just because rates are high relative to the pandemic rates and prices are high. And those markets are seeing downward pressure on price. They're seeing price depreciation. So how do we compare to these markets, and how do we compare by inventory? So what I did this month is I did a special chart on this on our region's inventory throughout the region, now versus prior years, and in particular, I'm going to focus on 2019, which was pre-pandemic. This chart's a little busy. I've got years going from 2018 through 2025, showing every month of each year. So I'm going to draw your attention to a couple of them that are, I think, the most significant for our purposes of evaluating this today. And the first one is this one up here on the top. This is 2019. It's this kind of orange, thick orange line. And you can see that with the exception of the latter part of the year, it's been higher than all of the other years as we've looked through 2018, 19, 20, 21, 2022. You'll see during the pandemic years, inventory got quite low. 2021 is way down in here by comparison. We all lived through that. So this is a high water mark, if you will. It wasn't the high water mark at the back end of the year, November, December, but this is the benchmark that we're looking at throughout the country, really, in these other markets. So where are we now? So here's 2025, and this is this kind of rust-colored thick line, which starts right here and moves along like this. And you can see we're starting to break out a little bit ahead of the pack down here from where we were in 2022. And we want to see this trend, how this trend continues. Do we cross this line from 2019 or do we stay below it? If we cross that line, that would be a clear indicator that we're probably moving towards higher inventory because people are now moving more than they were before, holding on to their interest rates. And we may be at a point where we've just run out of people who can afford the high prices and the high interest rates combined. So just to give you some perspective, in some of the markets I mentioned, like in Florida or Texas, they're seeing their current inventory levels, which is here for our market, compared to the 2019 market, which is up here. They're seeing them sometimes close to 2 times what we saw in 2019. So we would be actually off this chart. If we were 2 times, we'd be up in the 3,200 range, outside this range in this chart. So we're still pretty healthy in this regard, but this is something that you want to keep an eye on. And I think it's got potential to move forward over time and match or eclipse this 2019 threshold. And we'll see what that does in our current market. So I want to share that with you, just to give you some perspective. If you've read any media about what's happening in real estate, they talk about inventory and pre-pandemic inventory levels. And this is what we look like in our region as of June of 2025, still below 2019. That's going to do it for this month. I appreciate your watching. If you have any questions, you can leave them down below in the comments on YouTube. If you want to see the full report of the Greater Reno Tahoe Real Estate Report, it's like 30 pages long, and you can link to it. We link to it down below the video. If you have any questions from any of the agents who may be helping you from within the company, please feel free to reach out to them. We discuss the market conditions on a weekly basis in our sales meetings, and they would be happy to discuss current market conditions with you, how that may affect you if you're a buyer or a seller, and see if we can give you good advice and counsel for how you may want to go forward should you choose to do that. Thanks for watching. We'll see you next month. So long.